Hello, good afternoon, everyone. Thank you for joining our first installment of the Lend 360 Power Up webinar series. My name is Matt Cates. I'm the Education and Events Manager for Lend 360, and I would like to welcome you to our first webinar presented by Neustar. Today's topic, we're going to be covering Linking What Matters, Data-Driven Strategies to Reduce Your TCPA Risk. Today's presenter is going to be Mitchell Young. Mitchell Young is the Senior Director of Fraud, Risk, and Compliance at Neustar. Mitchell has been with Neustar for 11 years, helping companies leverage real-time identity data and analytic insights to improve operational efficiencies and manage risk and compliance. Prior to Neustar, Mitch was the Senior Director of Risk at Targets Info, where he built two separate multi-million-dollar vertical markets. Mitch has an undergraduate degree from Penn State and has an MBA from New York University. So without further ado, I'm going to pass along to Mitch to go on with our presentation. Mitch?
Hi, welcome everybody. I'd like to first thank Matt and OLA and the whole Lend 360 effort for inviting us to do this presentation today. We've been involved in OLA and the organization for many, many years. So building on what Matt said, Targets Info or Neustar actually acquired Targets Info. So for those folks who may know the name Targets Info a little more than Neustar, we're actually, now the same company. Have just evolved from Targets Info into Neustar. So we work with many companies in this space that are part of Lend 360 or part of OLA and in the lending space. So it's nice to be with you all. Let me first take you through the agenda for today. So we're going to cover TCPA and data that's available to help companies address the risk associated with TCPA and some strategies and best practices that companies are putting in place across a lot of different industries. But the agenda for today is first, we'll cover a little bit around the current environment of TCPA. And then second, we'll talk about the legal aspects and most importantly, the declaratory order that came out in July of last year. Because really that's what's driven a lot of the increased concern and demand among companies in terms of addressing TCPA. Third, we'll then talk about the challenges it creates for companies, certainly everybody that's here today, and some key questions to ask yourselves as you're putting together a strategy or policies in place to address TCPA and mitigate the risk. And then we'll talk about a solution that we have, and we'll talk about two case studies. The case studies are going to be around, we'll look at data, and we'll look at a portfolio of phone numbers that are examples across this industry, and we're going to look at it from two perspectives. The first is, how do you keep phones in the Autodialer environment without risk of TCPA fines? So essentially making sure these phones still belong to the customers you think they belong to. And the second strategy is, how do you maximize the manual dialing efforts? For phones that you may have without consent or you're unsure they still belong to a customer, how can you optimize a manual environment so you get most value out of your agent capital? And I think it will probably take about 35, 40 minutes to cover this info, and then I'm happy to open it up for questions and answers, or hopefully answers, but certainly open it up to your questions, and we'll see, if they're legal or data related, what we can answer today. So I'll dive in first with kind of the current environment. So in terms of TCPA, this is essentially why you should care. So basically any company who calls or texts, consumers or their customers needs to understand TCPA and its risks. The reason that TCPA has, become an issue for the FCC is because unwanted calls and texts are without a doubt the #1 complaint to the FCC year in and year out. And it is one of the reasons that the FCC, in terms of trying to address consumer complaints and consumer privacy, has put out these declaratory rulings around TCPA that, quite honestly have created more confusion, and their clarifications are somewhat vague and hard to understand. So if you're feeling challenged in understanding them and how to put policies in place, if it's any comfort at all to know that, all the companies we're dealing with feel equally perplexed at the rulings that have come out and what they really mean. Because, it's fair to say that the declaratory rulings certainly favored, they were pro-consumer and not pro-business, and corporate America was offered very little relief in the declaratory rulings. And what's emerged out of this is a very litigious environment for companies. What we can see, or what we know about TCPA, is the damages are pretty significant, right? It is $500 to $1,500 per unsolicited call or text, or facsimile if you happen to still be faxing. The lawsuits are on the rise, and this is the growth of what we've seen over the last few years in terms of the number of lawsuits. 2016 is continuing at an even faster pace than 2015. So we've seen continued growth year in and year out. And what we know is that the TCPA law is very favorable to a plaintiff's bar, which makes it very, attractive for them to go after companies and create class action suits. So you can see not only have there been a rise in lawsuits, but the settlements are quite stunning in their value, and they're disruptive to organizations to have to deal with them outside of running their own business. So this is kind of what's happening in the current environment. We've been working across many industries, and as I said, every company that calls or texts is dealing with the effects or the impact of TCPA. What I can tell you in the lending environment is financial services, the largest banks, and we work with, I think, 8 out of the 10 largest banks on TCPA issues, and most of the large collection agencies were probably the 2 industries that have been addressing TCPA the longest, and maybe we're feeling the brunt of lawsuits earliest. Healthcare, retail, utilities are still new in understanding, putting policies in place, and dealing with kind of their data and the issues around consent and their dial technology. I would say the lending environment, those kind of companies in the OLA environment or storefront lending environment, kind of somewhere in the middle. We work with many of the large online lenders today. I'm helping them address TCPA, but I would say it's still, companies right in the middle, those that have said, hey, we're putting policies in place, and those that are still just saying, hey, you know what, we need to deal with this right now. So depending on where you're all at today, you should know you're probably not far behind, or everybody, I think, is in a similar boat of trying to figure out what it all means, what is your risk tolerance within your own organization, and what policies and procedures are you going to put in place to address them. So I'll talk a little bit about TCPA and the recent ruling. So TCPA was started back in 1991, and the original intention was around telemarketing. And, at that point, it was around robocall dials and pre-recorded voice messages. And what's happened over the last few years is it really was not something that, most people dealt with or heard about over the last decade or so. And it was really in 2013 when there was a ruling that started to deal with consent, which said, hey, for telemarketing calls, you actually needed express written consent. And it was the first time that the FCC started to weigh in on TCPA regulations. So it has expanded the scope as mobile phones have proliferated and opinions have shifted over the years. But the bottom line is there are a few issues around TCPA and then we'll deal with the ruling that came out last July. So the key issues are you can't auto-dial or text mobile phones without consent, right? So prohibited from using auto-dialers or texting wireless phones without prior express consent of the called party. And we'll talk a little bit about the difference between prior express consent, how you obtain prior express consent, and prior express written consent. And there is a difference between marketing calls or between calls that are for collection or notification or general communication with the customer. Second is you can't robo-dial landlines without consent, and that would be robo-dialing with pre-recorded messages. And the last is you must capture and store appropriate consent. So the consent requirements do vary by call, marketing versus collections. So those are some of the key underpinnings of TCPA. And what happened is many industries were looking for clarification from the FCC around TCPA. So what happened was, July of last year came around, and that was an area, that was a time when the declaratory ruling came out. And it was still unwanted robocalls and texts were one of the top complaints that the FCC received month in and month out. So the declaratory ruling dealt with a few key issues. And I'll spend a few minutes now walking through those key issues because they're really kind of the crux of what companies are now dealing with and addressing. So the first is the definition of a called party. You may have heard about it dealing with reassigned phone numbers. But reassigned phone numbers and called party all stem from an issue that is around the intended recipient of a call. So, the issue is, I've just taken out a loan, I'm a customer, and you want to call me and reach out to me for notifications, for messaging, or maybe it's 6 months down the road and, defaults happened and someone's in a collection state. And the issue is you intend to call me to talk about the loan and to collect, but I've disconnected the phone and that phone's been then recycled and given to somebody else. And what the FCC has said is, even though you think you're calling me as your customer, the FCC has said, hey, the intended recipient of your call, it doesn't matter who you think you're calling. It only matters who the current subscriber is to that phone number. So if that phone's been reassigned to somebody else and you call them intending to call your customer, it doesn't matter. You can be fined $500 per call because the subscriber of that phone is now somebody else. So auto-dialing a wrong or reassigned phone number is where a lot of the risk lies today. And if you think about it from a skip tracing perspective, certainly those phones don't come with consent, and you could be auto-dialing. We know the quality of skip phone numbers varies wildly. So whether or not you're calling the right party is always an issue. So it has really put a shift from quantity of phone numbers that you may call to reach people to quality of phone numbers. Now it is very important as it relates to TCPA for companies to say, if I'm going to continue to auto-dial my customers, I need to make sure that the phone I'm dialing is actually their phone. So that's the first definition, or the first, one of the key areas of the declaratory ruling last year. The second issue is revocation of consent. We'll talk a little bit more about, in the next slide, around prior express consent versus prior express written consent, but essentially the declaratory ruling dealt with revocation of consent, which means that an individual needs to be able to revoke consent at any time through any reasonable means, which could mean if they come into a storefront to interact and want to revoke their consent, there needs to be a mechanism in place to allow them to revoke consent. If they're talking with an agent on the phone and they say, hey, I don't want you to call me anymore, I revoke consent, you need to be able to process and revoke that consent. So the declaratory ruling dealt with revocation of consent. And it maintain the rulings of the prior years around prior express consent, prior express written consent. The third issue dealt with the definition of an autodialer. This is one of the most, I think, challenging areas for companies because it impacts your your operations and how you manage your dialing. And it says that the basic function of an autodialer is to dial a lot of numbers quickly without human intervention. So, and that equipment that has the capacity to store, produce, or dial random or sequential numbers, even if it's not presently used for that purpose, is considered an autodialer. So making sure as a company that you have the capacity to manually dial and not use auto dial technology in a manual in a manual mode. It has to be manual dialing, and it is, I think, a challenge in working through that. That was one of the declaratory ruling clarifications of what is the definition of an autodialer. And the fourth, and one of the last ones, is this one call exemption. So it says that a single dial to a phone, everyone gets one single dial to a phone number that's exempt from TCPA to gain knowledge of whether or not a phone belongs to somebody or not. Has it been reassigned or not? And it doesn't necessarily matter if anybody picks up the phone, you just get one dial. But that was, we'll talk a little bit about that as it relates to reassigned phone numbers. It was one way that the FCC thought someone could get knowledge around whether or not a phone was reassigned or not. So these are the main issues that the declaratory ruling dealt with. And we'll talk a little bit more about them, and then we'll get into some of the data analysis areas. So in terms of reassigned phone numbers, what the FCC said is that when a phone is reassigned, essentially what happens is the consent on that phone number is no longer valid. And that if you were going to continue to dial that phone number, you would need consent from the new subscriber. So I'll give you a little background on this. So, you know, we've been involved in the phone industry for a long time, and our chief privacy officer was actually called into the FCC and worked with them as they were preparing this declaratory order. And in our consultation to the FCC, we said there is no silver bullet or data provider or data source today that can give you 100% coverage of reassigned phone numbers. It just doesn't exist. So we said, you know, there's no silver bullet. You're going to have to use a variety of solutions to figure out whether or not phones are reassigned. And the FCC said, well, why can't companies just have their customers alert them when they change their phone number? So that was one of many slightly silly ideas that the FCC had, because everyone knows that, you know, that there's not a chance that a consumer disconnects their phone number, they're going to call all the companies that they've worked with or engaged with to let them know that they're changing their phone number. So one of the other ideas they came up with was, well, we'll give a one-call exemption. So we'll let people actually make one dial out to a phone number, and after that dial, we'll assume that they have constructive knowledge of whether or not a phone belongs to that subscriber or not. They don't have to, no one has to answer. We're not saying anybody needs to answer, but one dial should give you that, which is another, I think, olive branch that offers very little assistance to companies. So, you know, we were named as a company that can help. We certainly have data that can help. We'll walk through some of those things. But essentially, phone numbers are getting reassigned now in as little as 30 days. So what happens are when a phone gets disconnected, that phone number then becomes available to give out to another subscriber. So in areas like New York, you know, there are no 917 area code numbers left, and people in New York, you know, prefer a 917 area code because it's well known as a New York phone number. So what's happening is when those phone numbers get disconnected, the carriers that own those numbers are actually redistributing them very quickly, and we're seeing it in as little as 30 days. So that's where risk is created because once a phone number gets disconnected, it could get reassigned to somebody very quickly. And I think in this industry, we're seeing more consumers who are disconnecting phone numbers, perhaps to, you know, not be reachable for any host of different reasons. So we tend to see more reassigned phone numbers among this consumer base than in other vertical markets that we work in. So that was reassigned phone numbers. I'll talk a little bit about consent. So in the communication that happens in the lending community, there's two types of communication. One is, you know, general communication, which is just, hey, you have a payment coming up, or here's some notices, or here's some insight you may want, or you're in collections, you're past due. And I would call those, you know, general communications to a customer. And what we know is that to auto-dial a customer on their mobile phone, you need to make sure that you have prior express consent. There are several precedent cases that have been settled that says when a consumer provides you their phone number during a time of enrollment or a time a loan is provided, that is considered prior express consent. I've given you my phone number on an application. You can now auto-dial or text me as long as you're getting the right person. So, you know, it is assumed that you have prior express consent. If you have a customer that's taken out a loan and they're now paid off and they're no longer an active customer, and you want to market to them and say, hey, if you're in need of a loan, you know, come back, special rates, whatever, and it may fall in the area in an area of telemarketing, for that communication you need prior express written consent. Written in the digital world today can be through double opt-ins. You can get it, you know, digitally. It doesn't actually have to be in writing. But to do telemarketing calls or texts, you need prior express written consent. So, you know, those are different things. And what's incumbent upon companies is they actually manage and store their consent. So should they need to, they can provide it and understand which consent they have, so they can ensure that they're able to communicate with the customer in the manner that they want. The recent and none of that changed in the declaratory ruling. What did change is that consent can be revoked by any reasonable means. So that's it's not a change in consent, but it certainly brought consent to the forefront as a concern. The next thing is the one call. You know, so the FCC did try to strike a balance to allow for one call for an undetermined amount of time. You know, we think the one call exemption is actually more challenging to operationalize than the value it can bring. So we kind of see this as a throwaway, something the FCC offered, but we don't know anybody yet who's put a really good policy in place and found good value coming from the one call exemption. So while it's there, in our opinion, it's hard to get any real knowledge or constructive knowledge from that one dial. So that's the overview. I've now covered two parts just kind of as a check-in, the TCPA current environment, what's happening today, and then an overview of TCPA and the declaratory ruling and some of the key issues. So in terms of industry challenges, these are the key questions that we suggest businesses need to answer as they look at mitigating their TCPA risk. And they deal with, you know, the core aspects of the declaratory ruling. So the first question as it relates to your phone data is understanding what percentage of your phones, your customer phones, are landline versus wireless, because they certainly, how you deal with those phones is different. Wireless phones is where the risk lies as it relates to TCPA. It's pretty easy to do. Most people have been doing this today, and figuring that out is pretty easy. The harder question, number two, is what percentage of your customer phones have been reassigned? Most companies in this industry, in every industry, haven't really put effort into managing their CRM, managing their customer database and their customer phones from the lens of does it still belong to them or is it reassigned? And it's really not surprising. You know, certainly in industries where there's a lot of collections-related activity, the bias has been towards quantity, right? Certainly if you're using skip trace phone numbers, you know, the bias has been just give me more phone numbers and I put them in an auto-dialer environment and we try to reach who we can reach. And now the issue is, well, now you have to be concerned who you're calling because there's actually some exposure if you just keep auto-dialing people that are not your customers. The third question is, how frequently should you monitor for reassigned phones? We're certainly seeing about every 30 days is a best practice because of the example I shared in New York, where we're certainly seeing phones getting reassigned in as little as 30 days. Now, reassigned is different from disconnected. So we're talking about the time period between somebody disconnects a phone and when it actually gets reassigned to somebody else. The fourth question is, how are you following up to your consumers? Are you auto-dialing? Are you texting? It's really understanding the communications that you're currently engaging in. Do they fall as general communications or do they fall under a marketing bucket? And, you know, how are you, which channels are you leveraging most? The fifth question is, how are you managing and storing consent? Are you managing for prior express consent? Are you establishing prior express written consent? And are you making sure that you have the right consent to communicate with the message that you want? And the last question is, how are you managing your auto versus your manual dialing efforts? You know, and do you have, when you think you're manually dialing, are you in fact actually manually dialing based on the way the FCC is defining manual dials versus auto dials? So we see these as the key questions to answer. Every company puts a different set of policies in place depending on their risk tolerance, but this will give you the core understanding of what you have to deal with as you address TCPA. We did a study, and this was back prior to the declaratory ruling. We did a study across banks and collection agencies and lenders to see what dialing strategies companies were most commonly using. And what we saw was, this is probably not surprising, there were about half that were exclusively manually dialing mobile phones. They said, you know what, we don't want the risk that TCPA brings with auto-dialing mobile phones, so we're going to manual dial everything. There was another half who said we do a mix of manually dialing and auto-dialing mobile phones, you know, when they have consent. And there were a few who were just, you know, I don't care, they're all staying in the auto-dial. Now, this is a mix of people that are collecting on third-party debt versus first-party debt. So I do think there's more of a tendency for those collecting on third-party debt to, you know, they may not have consent at all, so they're dealing with a manual environment, and those that are first-party, dealing with first-party customers where they may be doing a mix of manual and auto-dialing. Certainly this creates, you know, this is, from a dialing perspective, some of the challenge. How many of the phones can I confidently keep in an auto-dial environment if I want to be, if I want to mitigate my risk, which means I know the phone still belongs to my customer and I have consent, so I'm going to auto-dial it, versus I don't really know, so I'm going to put it in a manual environment. And then the issue becomes, how do you deal with your human capacity, with your agent capacity, if you now all of a sudden need to manual dial all these phones that you were auto-dialing in the past? How can you prioritize your queue to manual dial most effectively? And we'll look at two case studies. So, you know, best practices, and this is a kind of a bit of a summary of what we just talked about, is first, making sure you capture and maintain the appropriate consent, whether that's prior express consent or prior express written consent. Second is understanding your dialing technology within your organization, manual versus auto. And then third and fourth, dealing with phones, right? Understanding phone type, landline versus wireless versus VoIP, and correcting for porting issues of whether something's been ported from a landline to a wireless phone, making sure all of that is covered in the way that you're identifying phone types. And then the fourth is confirming the subscriber, right? Making sure that the phone has not been reassigned and repeating that, every 30 days. I'll jump into our solution and we'll walk through 2 case studies. So the first, and a little background on Neustar, is we've been around, as Target Info Neustar for, over 15 years, and we help manage identity in the telecommunications industry. We were selected by the telcos to help them manage a few different aspects or a few different things within the telco world. So the first and one of the biggest things we do is, we power about 85% of all the caller ID in the U.S. So about 250 telcos outsource their caller ID function to us. And it ranges from some of the largest carriers like AT&T to, Comcast, Cox, Alltel, a lot of the CLECs, a lot of the smaller carriers, but about 250 carriers outsource that to us. We're powering about 4 billion calls a day where we're linking names to phone numbers. We also deliver directory assistance. So every day there is phones that get connected and phones that get disconnected, mostly focused on landlines, but we're the company that actually puts out all the directory assistance data. We manage that and deliver it out every day. We manage port data. So when somebody ports their phone from Verizon to T-Mobile or AT&T to Sprint, we sit inside and manage that porting. And then we do a lot of market share analytics for the telcos. So we do all these things that give us tremendous insight and access to phones and identity for phones. And like I said earlier, we went into the FCC and we said there is no one that has 100% access or can give you a 100% solution of whether or not a phone has been reassigned or not. And we probably have most insight into the telco community over any other. As a data company, we're really a phone data company, and we know that it is a challenging issue. But we leverage all this data, and we've been doing it for years to provide verification queries. So if you enroll into a PayPal or eBay or Google or transfer money, we're used as an identity verification solution for companies across the banking industry and e-commerce industry to verify his identities. And now we've been focused a lot in helping companies manage their TCPA risk using this data. The way our solution works, and it's pretty simple, is on input, what we collect is a name, a phone number, and a consent date. And we provide back a few core kind of flags or attributes to help companies, I think, understand or answer the question of, is this phone number been reassigned or does it still belong to the customer, to my customer? So the first thing we provide is a verification that just says, yes, this phone still belongs to the customer. Or, no, it doesn't, it belongs to somebody else. We tell you phone type activity. So is this phone a wireless phone, a landline phone, or a VoIP phone? We can tell activity status. So has this phone, do we see it actively on the caller ID network? Do we see it actively making calls? And yes, we do. This phone's actively been making calls for 12 or more months. It's not a prepaid phone. It's not an over-the-top VoIP phone. And has it been disconnected since consent? So no, there's been no disconnect on this phone number since the company received a consent date on January 1st, 2015. The reason we built this solution is we're trying to answer the question several different ways. The first way is we're looking to say, can we confirm the name that we have is the same name that you have as your customer? So we can look for that kind of verification. But sometimes we'll just look to say, you know what, have we seen any disconnect on that phone number since that date? Because that's a sure sign that that phone, if it hasn't been reassigned to somebody else, it no longer belongs to that person. So we look to also answer that question with a disconnect date. Disconnect is a really challenging thing to answer. It sounds simple, but it's not, because what will happen is if I port my phone from Verizon to T-Mobile, Verizon will send, hey, we disconnected that phone. It actually wasn't a disconnect. It was just ported from Verizon to T-Mobile because the person liked that plan better. So it's actually really challenging to determine disconnects, because if you go directly to a carrier, they'll say, hey, we disconnected that phone in March. Well, that's fine, but T-Mobile now has that phone. It's still connected to that person. So we have to look at a lot of the moving parts within the telco world to be able to resolve a lot of very common movement within the telco industry. One carrier says it's been disconnected, doesn't belong to Bill Smith anymore. Well, it still does, just now T-Mobile, they're just not your customer anymore. So there's a lot of movement within the telco world that makes it really challenging to say, well, how do I know if this phone still belongs to that person or not? So we look at, verification, we look at disconnect status, and then we look at activity to say also, yeah, if it's verified and we've seen consistent activity on that phone number, they've been making calls for over 12 months. So even though it looks like a disconnect, it was just a port, it's still consistently active, and it still belongs to that person. And it is the combination of the data intelligence that we have that lets us provide a sense of whether or not this phone really belongs to that subscriber or hasn't been moved over to somebody else. So this is an example of a verification distribution. And I'll walk through this. So this is, when I just walked you through the output, it says, does this phone, verification to the consumer, does this phone still belong to your customer? And what we'll give back is a code, 0, 1, 2, 3, 5, 7, or 10. And, it looks like a stoplight. Greens are good, yellows are cautionary, reds and pinks are bad. So what we look at is we look at all the insight we have to say, is that name and phone still linked together? So 83% of the time for this customer, we can say, +3, so it's about 87% of the time we can say that name and phone are linked, either coming directly from the carrier or some other feeds that we have to bring in some additional insight. So that's great. So what we would say is if you have consent on these phone numbers, you can certainly keep them in an auto-dial environment with very little TCPA risk because you have consent, the phone's still active, and it still belongs. We can verify that it still belongs to that consumer. The 5s and the 3s are areas where, or the 5s are, we have no positive or negative linkages. We have no data on that individual. Maybe it's a prepaid phone and they got it at Walmart and there's just no name information available. So we can't give any positive or negative indicators. The 3s are where we can say that name and phone are negatively linked, but the name's associated with a business. So these are also cautionary. Oftentimes, there's little TCPA risk with phones that are registered to a business. So it may be that that's the person's phone number, but it's registered to a business. So some companies say, I have little risk in that one. So anything that falls in 10, 7, or 3, go ahead, we'll auto-dial. Some companies say, just 10s and 7s, I'm going to auto-dial. Anything else, I'm going to put in a manual environment. Where the risk comes out are in the 1s and the 2s. So in this population, there was about 1% where that phone had been disconnected since the time consent was received. Or 1s are we have that phone linked to another consumer. So they've been reassigned, they're linked to a different individual. So this is about 7%. Now, I will say this is a fantastic distribution of results. We'll see a wide range of results across industries and across companies. We've seen sometimes where these name and phone were negatively linked could be as high as 20%. So it does range pretty widely. This happens to be a very good example where this company has very good data, hasn't changed much, and they can confidently, auto-dial mobile phones if they have consent. So this is an example of how we're using the name verification to help address whether or not phones have been reassigned or they still belong to their subscribers. And we just covered all those bullets. So the next, I'll talk about some delivery options, and then I'll walk through one more case study which brings in all of the phone activity data. So the delivery options that we offer, and most companies are leveraging delivery option 2, which is, batch files get sent to us, that can be on a daily basis, weekly, monthly, depending on how your operations are set up. You can send phones to us that you're about to call for collections environment or for notifications or whatnot, and that we suggest that once you verified a phone, you certainly don't need to verify it again for, for at least another 30 days. And then it makes sense to reconfirm that it hasn't been, that it still goes to that subscriber and it hasn't been disconnected. You can also leverage us in a real-time query. So some companies are using us up front to say, hey, when the application comes in, let's verify the phone number at that point and ensure that we can get a good phone number, and then that verification can get maintained for a period of time. So, and some people use it, actually in this industry, what we've been doing for a long time is working with companies to verify phones up front on applications anyway as part of the part of their risk assessment as they're evaluating new customers. So many companies have been using us on a real-time basis for a long time in single queries, and now are using us batch queries on the back end as well in a collections environment. We do have a third, and we do this with most of the large banks, and it may be a scale issue. It made sense for them. Large banks, very distributed organizations, and may have 20, 30, 40 million phones that they're managing. And instead of sending that volume of phones every month, we'll actually do a baseline scrub and then host those phones, and we'll just send out notices should we see a disconnect on that phone. So instead of constantly running verifications, we're able to host phones on premise on our side and just send out daily notifications should we see a disconnect on a phone number. So it is the economics make a lot of sense on a large volume of phones. So within this industry, we haven't done that. We haven't found it was cost effective to do that yet, but it is certainly an option. So at least I can talk about it. I think all these should be pretty straightforward. The other case study that I want to walk through is really how do you deal with the manual environment, right? So if I have all these phone numbers, how can I prioritize my queue? Because my agents can't get through everything that I have. So how do I focus them on the phone numbers that are going to get me to the customers and get me, good contacts and dollars collected? So this is a case study that was for a collections agency, but I think the takeaways are relevant for lenders. So what we found when we did an analysis of this portfolio of phone numbers was that about 44% of the phone numbers were bad, fall under reassigned or inactive. So those could be prioritized at the bottom of the queue or removed altogether because they didn't bring much value. What we found is that 55% of the good phones actually accounted for 92% of their revenue collected. So we could increase collection rates by 70 to 150% and increase right party contacts by 60%. And the way that we were able to do that was by looking at our verification data along with our phone activity data. So there's a lot going on here, but I'll just orient you to a few of the key takeaways. So on the left-hand side, we have our phone activity. And that is organized in two buckets, and it's organized by month. So the top area is when phones are active, which means they've been actively making calls for a period of time, up to 1 month, 2 months, 3 months, or more than 12 months. The bottom half is when phones are inactive, which means we no longer see phones making outbound calls, right? It's gone dark, it's gone inactive, maybe it's disconnected. And across the top, those MPIC tiers are when phones are verified. So in the upper left-hand corner, upper left are the best phones. These are ones that are verified to your customer, and we've seen them active for more than 12 months. The worst phones are in the bottom right-hand corner, where it belongs to somebody else and it's been, or it did belong to somebody else and it's been inactive for 12 months. And what you can see is, we do these heat maps to say, where are we seeing the best RPC rates? And, what we're seeing is in the top left-hand corner, when there are, when the phones are verified and when they're active, the RPC rates are so much higher than when phones are inactive and belong to other people. And you can see, 8%, 9%, 6% if you look down that first column. I'm going to collapse this for the case study. So if you just kind of look at the colors here, what we're going to do is collapse these into, better, best, better, bad, and worse. So if you think about the chart I just showed you, and we kind of collapse all the greens into the best category and all the yellows into better and all the reds into worst, what we can see here is this is a snapshot of, there's kind of two takeaways here. The one is that the worst phones accounted for, 44% of all the phones in this portfolio fell into red, which means they were worse. And in a collections environment, it makes sense, right? Skip tracing is built on quantity, not quality. So it's let's get as many phones as we can, let's throw them in an autodialer and see what we can get. Well, what we found is that the best phones were 20% of the portfolio, and the RPC rates, across the best, if we look across this top column, it's 7.5%, which is much higher, almost 3x the average current RPC rate of 2.3%. And you can see it prioritizes appropriately. The better phones are just about average in terms of RPC rate. Bad phones are kind of below average, and the worst phones, you're not getting many RPCs at all. And if you look at dollars collected per call, it's pretty stunning, the difference in the best phones versus the worst phones. 92% of the revenue were collected within 55% of the phones. So this is, to us, or I think to many agencies that we're working with, this was the big aha moment to them, which was, if we're going to be forced to focus in a manual environment, we need to start focusing on quality and not quantity, because we don't have the capacity anymore to just throw any phone number we want into an autodial environment. So companies can do, we're seeing two things. Those phones that are verified and where you have consent certainly remain in an autodial environment. But those phones where there's concern around whether it's been reassigned or maybe it's been inactive and it goes to a manual environment, now there's an ability to use some intelligence to prioritize that queue. So we can say, great, let's have our agents work on the best phones first, and we'll work down that list. And if they don't get to the worst phones, that's okay. We're not actually collecting much money amongst the worst phones anyway. So if we're gonna use our capacity wisely, we can stack rank the phones so we can optimize our right party contacts. So it's a lot of data to talk through in a webinar. I'm not getting any feedback, but hopefully that all makes sense to everybody. I'm happy to walk through this, one-on-one again, or with anybody if there's interest. We're at the end, and thank you for everybody for hanging through with us. In summary, we see that TCPA risk certainly deals with operational efficiency and TCPA risk, and we're seeing companies grapple with both of those. That to minimize your risk creates a lot of operational strains and demands on the organization. So for us, from a phone perspective, we know that authoritative, accurate intelligence that's updated daily is key. Verifying ownership, reassignments, and phone type, are the three kind of fundamental questions that you need to be able to answer as you put policies in place to continue communicating with your customers. We're seeing activity insights as a really valuable additional attribute or additional piece of intelligence to help you with the operational demands that TCPA is placing on companies. And then it's, prioritizing the best phones and cutting the bad phones has allowed companies to, I think, deal with the issues that they're faced with and keep as many phones as is in their autodialer environment as possible. And then, of course, it's managing consent and making sure you store consent, too, because a lot of the issues with consent come with just being able to find your consent and easily access it should you need it. Thank you all. We're about 12 minutes or 10 minutes to 5, so went a little longer than I thought we would, but hopefully everybody found this informative and helpful in terms of understanding the ruling that came out last year and understanding some of the data that's available from Neustar that companies are using to address TCPA. So again, I wanted to thank Matt and the Online Lenders Association and Lend360 for inviting us to present today, and happy while we have a little time to take any questions that are out there.
Great, thanks, Mitch. We do have a couple of questions that came in. Just as a reminder to everyone, if you do have a question, you can type it into our Q&A feature and we'll answer it as it comes in. So, Mitch, the first question I have for you is, what is meant by consent cannot be a condition of purchase? Can consent be a condition of application?
Consent cannot be a condition of purchase. We dealt with this one not too long ago. Well, so there's two types of consent. There are, so what it means is prior express consent is if somebody gives you their phone number, they're giving you prior express consent. But you can't say to somebody, I'm not giving you a loan because you won't give me prior express written consent. I want to be able to market additional services to you, and if I can't market those additional services to you, I'm not giving you this service, so sorry. And I think the intention of that, and all of this is, you know, I'm not a lawyer, so I'll at least give you insights or learnings that I've heard, but please check this, is you can't deny somebody a loan or a service or something just because they won't do double opt-in consent. That said, if they give you a phone, it is prior express consent. So general communication should be okay.
Great, thanks, Mitch. The next question we have is, are click-to-call systems where a rep clicks on a number pulled from a database to initiate the call considered an autodialer?
You know, we're not autodial experts, and I know that there have been there was a recent ruling with CBE, which is a collection agency, not too long ago, I think it was about 2 weeks ago, where it may have been a Florida court that actually positively, what's the word, I think ruled in their favor that said they had developed their own click-to-call capability. And the courts ruled in their favor that, yes, in fact, their click-to-call capability did adhere to the guidelines of a manual dial. I don't have the specifics of exactly how that was architected, but it does seem like there is some movement in that direction where click-to-call is where there's some precedent setting going on. I know there are some other companies, I think, you know, LiveVox has one, Noble Systems has one, where they've built these cloud systems that are, if they're not click-to-dial, they're maybe, you know, key in some numbers pretty quickly. So I know there's some dialer companies that have really been addressing this issue, but I don't know if you can say with a blanket statement that, yes, any kind of click-to-call capability satisfies the current definition. So.
Great, thanks, Mitch. The next question I have here for you is, is it TCPA compliant to autodial a residential number as long as you don't robo-dial them?
Yes. So for residential numbers, you're pretty safe to autodial with a live person there. So there's a difference between autodial, so robo-dialing, which is autodialing and delivering a scripted message or a pre-recorded message. But for landline phones, there's not an issue in autodialing landline phones as it relates to TCPA if it then prompts to an agent to pick up. It is really, you know, wireless phones are the big issue around autodialing.
Great, thanks, Mitch. We have a couple more questions here.
Okay.
What are the best practices regarding max number of attempts to contact someone in one day for sales and collections before it's considered harassment?
You know, I don't know. You know, that is not an area that we've spent a lot of time. We're somewhat new, honestly, to the collections environment, and while we've had, you know, the same data and the same services for a long time, it was really with TCPA that brought us in, because all of a sudden quality data started to matter, and companies said, hey, we can no longer afford or risk the collateral damage of dialing wrong phone numbers. So some of the expertise around collections in terms of when does a number of calls become harassment or not, just an area I'm not sure of the details of those.
All right. The next question we have is an SMS message welcome following a promo text from a consumer without a specific acquaintance to receive more messages enough to be prior express written consent for marketing using SMS.
So you're going to have to read that one more time, Matt.
All right, I'm going to read this as best I can. Is a SMS message welcome following a promo text from a consumer without a specific acquaintance to receive more messages enough to be prior written consent for using SMS messages?
I believe prior express consent requires double opt-in. So if what you're describing meets a double opt-in standard, then you're okay. But you certainly need double opt-in for prior express written consent.
Great, thanks, Mitch.
Or a well-designed capture of written consent, and I'd work with legal, or consent experts to make sure what you're doing meets that standard. But I'm hesitating on that one because I'm not quite sure I followed it.
Okay, we have two more questions here. We purchase leads from customers that have expressed an interest in our product. Since these customers are looking for us to contact them and have provided a phone number to reach them, is the call still considered telemarketing? Does the TCPA still apply?
That is a tricky question and kind of the lifeblood of this industry. And I don't know if there's been any rulings that have said, hey, a lead generator, can they pass consent along to multiple lenders, not, or how does that consent pass? So logically, I'd say, yes. Of course, someone gave you their phone number. They're looking to be contacted for a loan. Absolutely, it makes a ton of sense. But I'm not sure, and I think it requires. I'd suggest getting a legal opinion on that one. I don't want to give one on that.
Understandable. All right, two more questions here. Has there been any recent changes as it pertains to the methods or processes to obtaining consent from a consumer to be able to contact them on their cell phone?
No, really the recent clarifications have been around revocation of consent, which is making sure that people can easily revoke consent around any reasonable means. They've left that kind of vague, but the capture of consent got there was a ruling in 2013 which really addressed consent. So there haven't been changes to that. It's really the declaratory ruling brought revocation of consent to the forefront.
Perfect. All right, one last question for you, Mitch, and then we're going to wrap up here. You touched a little bit on marketing and sales purchase calls. How does TCPA impact fraud call verification / transaction verification when dealing with a potentially compromised card?
That's a great question, and we dealt with this one at an operations summit we did last year, and we had someone from FICO in joining us, and their understanding was that you can get 3 attempts in a day. So let's say that, you believe there's transaction fraud. Their understanding is that you can get 3 exemptions or 3 calls for one fraud concern that you may have. So let's say that you think there's transaction fraud, you want to call someone and text them and then call them again. That's it. That was their understanding. We haven't done a lot of research on that particular exemption, but that was FICO's understanding. They work with a lot of the financial institutions on outbound communication and transaction alerting and monitoring and that type of activity. So it doesn't sound like it's completely exempt for fraud, but that there's there's a little bit more exemption in terms of a couple calls. I think their concern was that they might try 8, 9, 10 times in an hour if they really think it's fraud, because the quicker you capture it, the quicker you can shut that fraud down. So I do think there are some exemptions there, but that's at least what we've talked about at some prior summits.
Great, thanks, Mitch. Well, that concludes our presentation for today. I'd like to take the time to thank Mitchell Young and the whole Neustar team for presenting for us today. Don't forget to join us for a second edition of the Power Up webinar series. It's going to be taking place on Thursday, June 9th at 4 p.m. Eastern Time. We're going to be doing a webinar on how to pitch to investors. Also, while you're at it, don't forget to register for Lend360. You can see the link below, www.lend360.org, it's my mistake, /registration. On behalf of the Lend360 team, I'd like to thank Mitch again, and everybody have a great afternoon. Thank you.